I'm not surprised that they don't like the idea of having a better competition regime, but I don't think that's a reason not to go ahead with these changes. Canadians will be better served by having more competition. And so it's important, as legislators, that we remember our job is to legislate in the public interest. And that is often not the interest of large corporations. And so I took it as a sign that, we're probably on the right track if voices like that are having knee-jerk reactions.
Welcome to Perspectives, a Canadian journal of political economy and social democracy. I'm Clement Nokos, editor of Perspectives Journal and director of policy and engagement at the Broadband Institute. Earlier this fall, the federal Liberal government tabled Bill C-56, the Affordable Housing and Groceries Act, with the aim of jump-starting construction of purpose-built rental homes with a GST rebate on these kinds of projects. The new bill also seeks to increase competition in the grocery industry by strengthening the Federal Competition Bureau, upgrading its ability to investigate companies, and close loopholes in the merger approval process that may contribute to rising prices and profits. The federal NDP doesn't think this bill has gone far enough to help ordinary Canadians, and have requested a number of amendments to the first draft to include more non-market housing and remove political influence on the Competition Bureau, among a list of other measures, in order to pass the House. What will this amended piece of legislation do for working-class Canadians to make groceries affordable again? And does it go far enough? How has market concentration contributed to higher grocery receipts? And why should incentives to build more co-op housing be included in the final version of the bill? Social Democratic commentator and columnist Tom Parkin spoke to Daniel Blaikie, Member of Parliament for Elmwood-Transcona and NDP finance critic, about Bill C-56, grocery competition, and building non-market housing.
Back in mid-September, just before the start of the Commons fall sitting, an unhappy Liberal caucus met in London, Ontario. Liberal MPs complained they were facing flack from constituents and unable to point to what their government had done to hold back big increases in food prices. Shortly after, there was an unusual phone call from the Prime Minister's office to Jagmeet Singh's office. The Ministry of Finance was putting together a bill and wanted NDP help to push it through the Commons quickly. That request turned into an opportunity for NDP finance critic Dan Blaikie to bargain for improvements to the Liberals' proposed legislation. And to tell us about the politics and policy of it, Dan Blaikie joins us now. Welcome to the podcast, Dan.
Hi, Tom. Thanks for having me.
Do you think, thinking back, that the Prime Minister was taken by surprise over how deeply people were being affected by the food price hikes?
Well, I think it is a theme of this Prime Minister that he's often out of touch with the experience of a lot of ordinary Canadians. So I don't know that I was surprised that the Prime Minister was out of touch, but the fact remains that he was and continues to be in many ways. It reminds me of when we were heading into the pandemic. We had the Liberal government in those final question periods that were being held in person saying, hey, we're going to waive the 1 week waiting period for EI, and that's going to be enough to help Canadians through this pandemic. Well, of course, New Democrats knew at the time that wouldn't be enough. We continued to push for a $2,000 a month benefit to make sure that people could keep their home and put food on the table during a very difficult time, both from a public health point of view and an economic point of view. And, since the pandemic, we continue to experience serious economic consequences, including inflation that's still driven in part by supply chain disruptions that were a part of the pandemic, or the illegal invasion of Ukraine by Russia coming out of the pandemic. These are all things that are having an impact on inflation, and the Prime Minister has been characteristically out of touch, and it has fallen to New Democrats to say, look, we need actual solutions that are going to make a difference, sometimes in the short term, like a doubling of the GST rebate, which was a measure that we got the government to undertake coming out of the pandemic, or some more medium to long term solutions like restructuring our competition legislation to try and create more real competition in industries like grocery, where even though on paper we're supposed to have a competitive market, in practice it's very clear that we have just a few players who are able to set prices.
The Liberals began to feel the heat. They reached out to you to help craft or for your request for your support for what they drafted as Bill C-56, the Affordable Housing and Groceries Act. But what exactly did they, in your first conversations, what exactly did they want your support to be?
Well, I mean, I think you can see if you look at the first draft of the bill, what they had in mind. They wanted to take GST off purposeful rental across the board. And they wanted to do some tinkering with the Competition Act. In both cases, as far as we were concerned, it wasn't enough. It wasn't enough if you look at the first draft of that bill on GST for purpose-built rental because they left out the entire cooperative movement and they didn't have a real plan for how to invest in more affordable and social housing. I don't think we're really there yet, although there was some promising developments in the fall economic statement. I still don't think the government is acting with the sense of urgency that the housing crisis requires. And then when it came to the Competition Act changes, when we get to talking about some of the changes we were able to get them to make, I think you'll see that their initial proposal was quite deficient and didn't really empower the bureau to be able to undertake market studies, for example, on its own
Okay.
initiative.
Okay, before we get into the details of the changes, a little bit about the politics and the process here. You're having discussions with Ministry of Finance folks, Minister Freeland, and at this point, there's already a bill, right? It's already being entered into the Commons. So how did the changes from you end up into the legislation?
Well, there was a fair bit of work, and there is somewhat of a working relationship. It can be a little strained at times, to be sure, but there is a working relationship there from the supply and confidence agreement. So there are folks in our leader's office that work with folks in the PMO when there are issues between us that we want to see resolved and that we want to make progress on. So those conversations started to happen, but we were also, this wasn't a back room thing. We were very clear publicly. My colleague Jenny Kwan and I, who's our housing critic, held a press conference together in September to say, look, this isn't on its own. What's in Bill C-56 is not enough. It doesn't address the need to do things in the affordable and social housing space, and it doesn't get the job done in respect to the Competition Act. So I would say, those conversations were happening privately in terms of particular measures and trying to find common ground. What particular measures can we proceed on? But that was happening in tandem with a very public and transparent conversation about the fact that we weren't satisfied, that we were willing to work with the government to move the bill forward if they strengthened the bill in order to get more done for Canadians who are struggling to pay the bills.
But this took place as amendments that you proposed that they supported?
Indeed. Yeah.
Right. So these are drafted by you, and the politics was to win their support for things that you had been advocating, I guess, as well through the private member bill of Jagmeet Singh, because this was already out there, and some of these concepts you were already advancing.
Absolutely. And, I think for folks who want to kind of understand where we were coming from in those negotiations around changes to the Competition Act, all they have to do is take a look at Jagmeet's bill, and they'll see the framework that we were using to negotiate changes to Bill C-56. It's been a pretty transparent process.
Tell us a little bit about how those amendments will change Competition Bureau powers.
Sure, there are kind of three big changes in Bill C-56 as amended that we brought to bear on that bill. One of the things the Liberals were already doing was getting rid of the efficiencies defense, which was, in our view, just a kind of major loophole in competition law that said, hey, if you're going to have a big corporate merger that creates market dominance for one player, that's okay as long as it's more efficient. Well, I mean, usually mergers happen because they're expecting to get some kind of efficiency. And so that just kind of became a loophole that you could drive a truck through. So that was the thing that the Liberals had singled out that they were going to get rid of. In addition to that, we changed the bill so that the Competition Bureau itself now can decide to undertake a market study. Before that, they used to need essentially it had to be the minister sign off on a market study. So if the government of the day didn't like the politics of looking into a particular industry, you could be pretty darn sure that the Competition Bureau wasn't going to look into it. And that was a problem. That's something that's finally getting fixed. The next thing was that if you wanted to take action against a particular market player for abusing the power they have in the market by being a big player, you needed to prove three things. You needed to prove their market dominance. You needed to prove that they were doing harm to consumers through that market dominance. And you needed to prove that they intended to do that harm. So with the changes that we brought, you still have to prove market dominance, but now you don't have to prove both harm and intent. It's enough to prove one or the other. So if you can show that a company is dominant in a market, you no longer have to show that they're causing harm to consumers and that they mean to do it. You just have to show either that they mean to do something nefarious or that their actions are causing real harm. And that's a way of saying that if you're a big player in an important industry, you have a responsibility to consumers. If your actions are doing harm, we can intervene and we can say that there's something wrong here. We don't have to show that you mean to be hurting people in order to do something about it. The fact that there's harm is enough to start addressing an issue, which I think is a really important change. And finally, before we get into some back and forth, we also raised penalties, and particularly also have a higher penalty now for second offenses under the Competition Act, so that there is some escalation when companies are reprimanded and don't change their behavior.
Okay, so you kind of gave the Bureau some political independence in
Yep.
pursuing investigations, and I guess it must have been tough for them to meet the test of intent, because I would assume that if people are doing nefarious things, they don't write it down all that much. And
Well, and more to the point, the Competition Bureau didn't have the power to subpoena any documents, which
Right.
is something that's changing as well. So even if they had written it down, you wouldn't have been able to get access to the paper or the email chain where they wrote it down. So, putting the Bureau in the driver's seat in terms of being able to start market studies and then actually giving them the power to compel evidence is a huge thing.
how does the Bureau go about proving market dominance? What does that mean in real terms, say in the food industry, where 80% of sales are five companies?
Sure. I mean, I think really that's about looking at market share. So how many competitors are there in the market? And then, if you might have, so for instance, if you look at the financial industry, just as an example, right, you've got five banks that control over 90% of the market in terms of how much business Canadians are actually doing with them. So you could say, oh, well, the financial industry has lots of competitors. There's various credit unions, there's fintech companies, there's all these folks. But when you look at market share, like how much of the total business is each company doing, the fact is that the lion's share of those competitors in the financial industry are competing for a very small amount of the business in the industry. The big five banks are still taking up the lion's share of the business. And so that's a way to show that those big players who are playing in that large portion of the market share, those are the ones who enjoy market dominance. The other ones are in the market, but they're not dominating the market. They don't have the power to kind of set the rules of the market or anything like that. So those are the kinds of considerations that go into determining whether a company enjoys dominance in a market as opposed to simply participating in a market.
The trigger, obviously, the public outrage was around food prices, are heavily driven by food pricing, but the changes that you're making would apply to all industries.
They would, yeah. And so, I mean, I think this is an important thing for Canadians to know. Like, yes, we are, and certainly New Democrats have been talking a lot about grocery prices and the very privileged position of the big three Canadian companies. And I think there's two large American companies, and together those five companies really control the Canadian food market. We're concerned about that, but the changes that we're bringing to the Competition Act will have impacts in other industries as well.
And I was interested to see that the then CEO of the Business Council of Canada, Golden Hayer, who I kind of would have thought would be a supporter of free enterprise and competition, all those kind of good things, was a little upset with these changes, saying that he called them an ambush and capricious. What do you think is behind that sort of analysis from business groups that they really didn't like these changes too much?
Well, I mean, it's not a surprise to hear that some of the folks who represent some of those large businesses that do enjoy a very privileged position within essential industries, whether that's oil and gas or groceries or the financial sector or telecoms. Like these are industries in Canada where we do have some very big and very powerful companies that aren't used to having to compete. I'm not surprised that they don't like the idea of having a better competition regime, but I don't think that's a reason not to go ahead with these changes. Canadians will be better served by having more competition. And so it's important, as legislators, that we remember our job is to legislate in the public interest. And that is often not the interest of large corporations. And so I took it as a sign that, we're probably on the right track if voices like that are having knee-jerk reactions. But I would say, as a social democrat, I mean, these changes are perfectly consistent with the kind of competitive markets that business people laud and say that they just want to be able to compete fairly in. So let government get out of the way. Well, this is about establishing that kind of framework. We'll see what kinds of benefits it delivers for Canadians. I'm hopeful that in the medium to long term that it will have a salutary effect on prices. But this is just kind of good due diligence from a market point of view. There are other things we would like to do that go outside that box. I say that as a proud supporter of Manitoba Hydro. Manitoba, for instance, is a Crown public utility that I think delivers great service to Manitobans at one of the best prices you can get for electricity in North America, while also delivering revenue to government to help keep taxes lower than they would otherwise be. That's a conversation for another time. The changes to the Competition Act are squarely within a market framework, and so I think in time we'll see business leaders get behind those.
The food industry has obviously pushed back on this idea that there's greedflation or that they're pushing through price increases that are flowing through into investor profit. And, we've seen a lot of pushback from CEOs, Galen Weston, et cetera. But I understand you've got a take on this and studied the industry at a fairly detailed level. Can you tell us a little bit about, in nuts and bolts, some examples of how you see the market, a market of 5 companies? How do you see that working against Canadians who just want to go out and get groceries at a fair price?
Yeah, I mean, I think the first thing to keep in mind when we're talking about Galen Weston defending the industry is that he makes something like 431 times the salary that the average paid worker at his stores do. So I think it's a little rich coming from a guy like Mr. Weston to say that, all is well and nobody's running off with a whole fistful of cash. He is. And even though, people will say, oh, well, the grocery market is traditionally a low margin market. My colleague Alistair McGregor has pointed out that actually grocery profit margins have been going up and their absolute profits have been going up. And this is at a time when, they've got workers out on strike who are asking for a 5 cent an hour wage increase and they're pushing back on them. So, profits are going up. Payments to shareholders are going up. The CEO is very well remunerated. I just don't think there's a lot of sympathy for big grocery store CEOs pleading poverty when Canadians are having a hard time making their rent. It's why New Democrats have proposed things like legislating a ratio for CEO pay. CEOs can only make so many more times than their average paid worker. And if they do make more than that, then their corporate tax rate goes up, because we do think that there should be some reasonable rapport between what top executives are making and what people on the shop floor are making. We think that's only fair. We've also talked about imposing an excess profit tax. That's something we made the Liberals do on the financial industry. You'll note this guy didn't fall. Instead, what happened was that government produced a lot more revenue to help pay for important initiatives, whether that's dental care or the doubling of the GST rebate. So these are some of the ways that when we talk about government wanting to balance its books, it's not just about eliminating costs, it's also about raising revenue. And you look at guys like Galen Weston, they're walking away with a lot of revenue, both personally and corporately. In terms of their shareholders. And so there are ways that the Canadian government could push back on this if they wanted, by letting companies know they're not going to get to keep all that profit. If you gouge Canadians, you won't get to keep all the money. And by saying in terms of your own internal structure, you have to make sure you're paying workers more fairly instead of taking all of that cash home for yourself.
At a detailed level, when you walk into a store and you're seeing the prices gone up again, and yeah, it's not a very competitive industry. It's dominated by a few players, but still there are players. There are five players, and people will say, well, there's competition. So how does that situation of this kind of oligopoly allow companies to inflate the costs and take that money home?
I think part of it is just that, when those prices are going up kind of in tandem, whether that's, the result of any kind of deliberate collusion or not, if people leave one store and go across the street to the next and see the prices have gone up by about the same amount, what it does is it makes it more plausible to the consumer that this is something that they can't avoid. Because why wouldn't store B want my business by dropping the price a bit if they could? And so as long as they're all kind of raising prices together, it looks to the consumer like there's no option there. I think the best example of this is gas stations just before the long weekend when everybody's thinking about heading out to the lake or going to the beach for the day or whatever else, and suddenly prices are going up at all the gas stations, and you think, well, has the price of oil changed? Well, no, it hasn't. So what's going on? And I think we know enough about it now to know that they're not necessarily having meetings behind the scenes. Certainly no one's been able to prove that over the years. But when they look out the window and see the guy across the street starting to bump up his price, often the answer isn't let's hold our price and steal the business. The answer is let's raise our price too, and with the same amount of market share, which is already high in an industry with only a few players, we can make a lot more money. If we try and beat that guy, we're only going to steal so many of his customers, and we're going to be selling at a lower price. And every little bit of that price increase is gravy. So why wouldn't we want to just raise our prices and keep our current customer base instead of competing for more of their customer base? And so I think that's how it kind of happens in a more natural way. Kind of doesn't matter how the job gets done for the consumer because they're still getting gouged. And
Right.
that's why there's such an important role for public sector regulation in some cases, or in others. I pointed to Manitoba Hydro earlier. I don't think we're ever going to have a competitive electricity market in Manitoba with multiple players. It's too expensive to get into that business. So there you have an example of where having a Crown corporation delivering that service is the best way. But some kind of public sector intervention, anywhere from running a Crown corporation like Manitoba Hydro to having something like to having better competition laws to try and prevent this kind of collusion and to allow more entrants into the market. Those are all important things. And that's something that we're looking at right now as a live issue in the financial sector with the proposed RBC HSBC merger, right? And the Competition Bureau has pronounced on that. They've done that in the context of their old rules. It would be interesting, and I would very like to see the Competition Bureau reassess that merger under the new rules. We know that HSBC historically offers mortgage rates that are something like 70 basis points lower than RBC. It's about the seventh largest bank, but it's considerably smaller than any of the big five. So why do we not want to keep this competitor in the market? That's good for Canadian consumers. If they can count on an institution that's going to give them a lower rate, we shouldn't be allowing a bigger market player to eat them up and have that better mortgage rate disappear.
Interesting. And in the food industry, there's the same pressures or the same instinct of the major players to create barriers to others starting up and providing competition.
Absolutely. And, some of the ways that we see that are, for instance, if a grocery store moves into a strip mall, they might, as part of their lease, require that the strip mall not lease out any other space to folks who sell food items, right? So you can't get the little corner store, and they might even try and establish a radius with that company, right? We know that real estate is also another place where there are some big players, right? So you might have a grocery store sign a contract with a big real estate company that says, we're going to rent out this many square feet at this location, but for 10 or 20 kilometers in any direction, we don't want you renting out real estate to another grocery store, So those are some of the other kinds of anti-competitive practices that emerge, and the legislation that we're looking at both in C-56 and the BIA, because there's changes that are coming in both bills, a lot of which is inspired by Jagmeet's private members bill, also address some of these other issues where, in the case with real estate, it's not that somebody's acting against a direct competitor because the real estate company doesn't sell food, but the relationship is affecting competition in the grocery space. So we're trying to expand the mandate of the Competition Bureau to be able to look at some of these other practices that aren't necessarily by one industry player against another industry player, but leveraging their relationship with other industries to reduce competition in their own.
Interesting. And you mentioned earlier that the Liberals started with the idea on housing to eliminate GST on apartment buildings, on purpose-built rental buildings. But you raised some concerns about that and got some changes. Can you just mention that, to speak to that for a sec?
Yeah, so the first big thing was co-ops were excluded, and that just didn't make any sense to us. New Democrats are big supporters of the cooperative movement. We know that co-op housing makes a big difference for folks. It can do that because many co-ops will provide social housing or deeply affordable rents, where rent is a function of income. Sometimes they offer affordable rents, which is just a discount on market rent. But even where there's also, market co-ops or co-ops that have market rent in their units, it's another way for people to get access to housing that maybe the kind of traditional ownership model doesn't work for them, but they want to have more say over the building in which they live. And so co-ops have been a great tool in that way. It didn't make any sense as far as we concerned to see that excluded. We're willing to get behind the idea that we do just need more market-based purpose-built rental. And if you attach a lot of affordability conditions to the GST rebate, the risk was that you don't then see more proliferation of market rental units. But our point was that then you got to do something else on the social and affordable side for housing. So in the fall economic statement, what we saw was a replenishment of the co-investment fund, which was one of the funds under the National Housing Strategy that has seen the most success in building social housing units. And we also saw a recapitalization of the rental construction financing initiative. Our disappointment in the announcement of the fall economic statement was that this funding is being put off for about another 2 years. We don't think that meets the urgency. So we are pushing for more things, and there are other things in the housing space we would like to see the government do. But getting co-ops in on the GST rebate was important. A strong signal that the government is going to continue to support programs that have helped build some more social housing was a step in the right direction. I think there's more work to do on that.
Just curious, did the Liberals provide any rationale for why GST relief would only be for private developers and co-ops would be excluded from that benefit?
No, they never did, which makes me feel like it was a genuine oversight. But I think, if you're seized with the housing crisis,
Yeah.
One really good tool for addressing the housing crisis is housing co-ops. It's a good model and it's a non-market model. So one of the reasons we're in the housing crisis we're in, and there are a few, and I won't turn this into a podcast about the housing crisis, but certainly one of the reasons is speculative pricing in the real estate market. And so the more that we can build how it stands outside the market, so it's, sometimes with a co-op, what'll happen is if it is an equity-based co-op, for instance, you might buy a portion of the co-op and then you can sell that to a new co-op member when you leave, but they don't necessarily have the price appreciate as a market asset would. And so that means you buy your way into the co-op and you're there for a time. Other co-ops don't have an equity piece, so you just rent from a co-op. In any event, these are ownership structures that push back against the speculative influence on real estate prices. So that's a good way to invest if you're trying to fight a housing crisis. It's a serious blind spot for a government to have if they are serious about addressing a housing crisis, to not be considering co-ops as a really good tool for pushing back against the kind of out of control price inflation we've seen in the housing market in Canada, not just in the last 2 or 3 years. One of the things that Pierre Poilievre really doesn't understand is an exponential curve, which is funny for a guy who thinks he's an economics expert. I mean, if you track price increases in Canada, they've been on a steady exponential housing prices doubled under the Harper government too. They weren't as bad after doubling under the Harper government because they started better. They are worse now under the Trudeau government because they started higher and then doubled again. The Harper government was in power for about 10 years. The Trudeau government's been in power for about 8. So what we're seeing is a pretty consistent price curve on an exponential curve, and we need to find a way to arrest that trajectory. And one of the ways to do that is to invest in non-market housing. Co-ops are one of the best ways to do that, and we got a government that is clearly treating it as an afterthought instead of an important policy tool. That doesn't make a lot of sense to us.
When do you think these changes are going to become enforced and the Competition Bureau will start having powers to be more independent and take more action?
Well, I mean, we just saw the bill pass through the House of Commons, and so then it's got to get through the Senate. As you know, that has not been the kind of clear-cut rubber stamp path that it used to be. And while I'm not usually a fan of rubber stamping, I have to say having an unelected and unaccountable legislative body like the Senate be able to delay legislation that's been passed by people who have a real mandate from Canadians is a frustration. We're seeing that on a number of bills. Say Conservatives are picking and choosing which bills they want to make a big deal out of. The fact is that there are a lot of examples, including ones where Conservative senators have been in the driver's seat on that kind of delay. So it's always hard to say when exactly things are going to come to fruition. It's going to depend on when it gets out of the Senate. And then there will be some time for the Competition Bureau to be able to get ready for those things. I think the time frame is in the order of 6 to 12 months. We heard at committee. So this isn't something that's going to happen overnight, and it's not necessarily going to have the effects on pricing at grocery stores overnight, but it is really important from the point of view of addressing some of those underlying structural causes of price inflation in Canada so that we don't continue on the trajectory we're on, but we actually start to see those increases going down and starting to see more fairness for Canadian consumers.
Okay, Dan Blaikie, NDP finance critic. Thanks for joining and helping us understand a little bit more about these changes, giving us an insider view. Thanks.
Thanks so much for having me on.
That was Tom Parkin in conversation with MP Dan Blaikie, the federal NDP's finance critic. If you like this conversation, share and subscribe to Perspectives, a journal of Canadian political economy and social democracy on all major podcast platforms. You can find recent economic analysis on the financialization of both the housing and the grocery store industry released this past year by the Broadbent Institute at broadbentinstitute.ca. You can also read more in Perspectives Journal, a publication of the Broadbent Institute, by visiting perspectivesjournal.ca.